Investing in Hawaii requires a high barrier to entry, but I'm here to give you 7 practical strategies to help you get started. If you're here, it's because you're interested in not just buying a home, but also learning how to make that home work for you. I'm going to share some insights into how owning real estate in Hawaii can become a powerful strategy to build wealth, not just to live, but to thrive. Let me take you back to a story I once heard that changed my perspective on investing. The speaker shared a story about his dad. He had just retired, and luckily, his home was fully paid off. Sounds great, right? Except there was one big problem. Even though there was no mortgage to pay, his dad was still financially struggling. Why? Because after retirement, his income stopped. Now, here comes the powerful question that changed my life. The speaker asked, what if his dad had bought just one more home? Imagine, besides the house he lived in, if he had another property that could generate rental income. By the time he retired, he'd have 2 fully paid off homes, one to live in and the other one to generate a steady rental income. This rental income could have sustained him comfortably for the rest of his life. It's such a simple yet life-changing concept, and it's a strategy that we, especially here in Hawaii, one of the most expensive housing markets, can apply to take control of our financial futures. Now, I want you to imagine yourself 30 years from now. You could choose to buy just one home and you'll enjoy the pride of ownership, or you could take it a step further. You can buy 2, 5, or even 10 homes over the next 30 years. By the time you retire, these properties could be fully paid off and bring in income that allows you to live the lifestyle you dreamed about for the rest of your life. I know it sounds challenging, but every successful real estate investor I know started small. They started with just one home, often one that needed a little love and sweat equity. They didn't jump into 10 properties overnight. They built up slowly, they learned, and they leveraged. Today, I'm going to share 7 practical strategies to make real estate work for us here in Hawaii. 1. Buy a fixer-upper and use sweat equity. The first strategy is to buy a home that needs a little bit of work. Maybe it's a fixer-upper that requires cosmetic upgrades like new kitchens, bathrooms, or flooring. Doing this work yourself or with the help of contractors can add substantial value to the property. When you do this right, you improve your property's value and set the stage for rental income or profitable future sales. Take my first property, for instance, a condo in Makiki. It wasn't perfect when I bought it, but with some renovation work, it transformed into a solid home, eventually turning a profit that allowed me to upgrade to my next home in Kaimuki, Kahala. 2. Buy your home as an owner-occupant and find roommate tenants to cover your mortgage. Living with roommates might cramp your style and is not for everyone, but roommates paying rent could be a smart way of helping to pay your living expenses and build your equity. You could also use the money you save as cash down payment for your next home. By the way, your lender will not be able to use the potential rental income for your loan qualification calculations unless your home has a second legal kitchen. Even with the second legal kitchen, your lender will require an actual executed rental agreement to verify the rental income. Another variation of this is purchasing a large single-family home or a multifamily building where you live in one unit and rent out the others. This strategy, also known as house hacking, allows you to secure a primary residence loan with more favorable terms and rates while also generating rental income to offset your mortgage costs. 3. Start as an owner-occupant, then turn it into a rental. Another approach to consider is starting as an owner-occupant. Buying as owner-occupant usually means you can access lower mortgage rates and down payment requirements. After living there for a few years, you could then turn that home into a rental. This way, you have minimized your initial out-of-pocket costs while setting yourself up for a future income stream. 4. Take advantage of capital gains tax relief. For those of you planning long-term, selling your principal residence after living in it for at least 2 out of the last 5 years is a tremendous opportunity. You can avoid paying capital gains tax on up to $250,000 of tax-free profit as an individual or $500,000 if you're married. This allows you to maximize your profit, which you can then reinvest in even more promising opportunities, all without losing a significant chunk of profit to taxes. By leveraging this strategy, you can cash out and grow your real estate portfolio, setting yourself up for future opportunities. 5. Buy pre-construction in new condo projects. For those of you looking for new construction opportunities, buying early in a new condo project can be an excellent way to secure a discounted price. In Hawaii, new condo developments often require reservation agreements before construction even begins. By buying early, you not only lock in a lower price, but you also position yourself to benefit from any appreciation that occurs during the construction period. I did this with an a'ali'i 1-bedroom condo in Kaka'ako and sold for a small profit a few months after the building opened. If done correctly, buying the pre-construction has many benefits, including securing a rental property at a discounted price, reducing property maintenance with a new construction rental, increasing your cash flow and appreciation potential, leveraging additional tax deductions such as depreciation and interest, deferring capital gains taxes on underperforming rentals by using a 1031 exchange. 6. Trade underperforming rentals into better cash flowing properties. If you have older rental properties that aren't generating the returns you want, consider trading them into newer, better performing investments. A 1031 exchange allows you to defer capital gains taxes while upgrading your portfolio into properties that bring in more consistent cash flow and have lower maintenance costs. If you don't like the time constraints of a 1031 exchange, consider investing passively into a syndication that generates passive losses. These paper losses can be used to offset your passive income. Check with your CPA for more details on this strategy. 7. Run your investment as a midterm rental. Midterm rentals, typically lasting from 1 to 6 months, can offer a perfect balance between long-term stability and higher returns compared to long-term leases. In Hawaii, this type of rental is particularly attractive to professionals, digital nomads, and families who need temporary accommodations. Midterm rentals provide flexibility without the frequent turnover of short-term vacation rentals. This allows you to maintain your property more easily, adjust rental rates to suit market conditions, and ultimately achieve better cash flow. By filling a market gap between short-term stays and long-term leases, midterm rentals can help you maximize your property's profitability. I expect the rental rate to be roughly 1.5 to 2x the long-term rate. I'm currently doing this with a couple of rentals, and I've had no issues with filling them. I also appreciate the flexibility this strategy allows for having friends and family visit and have a place to stay. So, whether you're thinking about buying your first property or expanding your portfolio, I challenge you to think beyond just owning a home to live in. Think about how that property and maybe the next one you buy can create real financial freedom for you and your family. You don't need to buy 10 properties tomorrow. Start with one. Make it work for you, then keep growing. If this video gave you something to think about, or if you're interested in more strategies to succeed in the Hawaii real estate market, make sure to like and subscribe. And as always, I'm here to help. If you have questions or want to dive deeper into these strategies, drop a comment below or reach out. Let's build that dream together.